Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:50 a.m. on Wednesday, June 29th, and as always, please run your player at 1.5x. Quick look at futures. Oil's trading about 112.50. Seems to be on an upcycle now. Has broken from a downtrend line and now working its way back up. Same thing for nat gas, up 3%. Equities, I'm just going to call it flat to down about 0.25%. Probably everybody in a holding pattern until we get a GDP print. And Jay Powell talking before the bell this morning. So those two catalysts certainly have the potential of moving markets. Over on the earnings front today, Bed Bath & Beyond before the bell, General Mills, and Paychex were three that I saw that stood out. And then tomorrow we've got Micron Semiconductor after the bell. So got thrown a curveball yesterday. I mean, I was certainly planning for a run to 4,000 on SPX to see if we could get a strong close to the month. Obviously, that didn't happen. So let's get into the charts. Just quickly here with Bitcoin, we're trapped in a range here between 22,000 and 19,000. I think until one of these levels breaks, you can certainly make money in between the range if you're a sharpshooter and small time frames and trading futures or whatever you want to do. But for a big trend change type situation, I think you got to wait till you break this range. Looking over at NYMO, we had come up to this plus 40 range, came back a little bit yesterday. Not really predictive at this point. You see the same kind of pattern on NASDAQ. Came up to 42. Now we're back at 13, right in the middle of the range. So moving on to SPY. We have been working our way up nicely. Came in here, had recaptured the 20 EMA here in dark blue. Had gotten above. Really was right here at 390, and you can see that we had a gap, and then the downtrend line on the daily chart coming in right here. I thought we could make a push up to that level. Now we still could, so it's not totally off the board. But after you have a 2% down day, kind of throws a wet blanket on what had been a pretty nice little kickback rally. And if you look, that's actually been the modus operandi of the market over the last few months. You can see here, May month end, we had a little run that failed. April, not so much. We came up here end of the month and it failed. And then in March, we had a run from early March up to the end of March, and then it rolled over again. So we'll have to see today. If we move on to the hourly chart, I think you can see the situation a little bit better. We had this uptrend line off of the lows. We had a sell signal here on a break of this line where we had the bottom of the value area right here where we had support, and then that break. There was a chance for the trend line support to hold it, but that broke. And now we're sitting down here, maybe a little bit inside, but let's just call it the top of the gap. I think you can use these gap levels this morning if you're actively trading. If we undercut it or open a little bit below 381.36 and then recover it, you can get long against that level and then look for a move back up towards 387. If we break lower, your first target's going to be the bottom of the gap. And then if we lose that level, then I would imagine, notice your high volume over price bars here, I would imagine price would be destined for at least a touch of 372.50, and then we've got another sizable gap below. So anyways, also on your indicators, notice we broke trend. We had a nice uptrend line. We broke that. Now RSI dropped down below 50, and we also had a bearish cross on PPO. So I mean, price really needs to turn around here soon to kind of, I mean, you could have a ramp, then a 50% pullback, and then a reacceleration higher. But you'd see that in the you'd need to see PPO start to come down and curl back up, and then you'd need to see RSI also curl back up over the 50 level to get it back on track. Now, this particular chart made a lot more sense technically from the standpoint price ran right into this downtrend line on the daily chart and was rejected, and it just we rejected it Monday, and then yesterday was a sharp move down. So at least there we had reference points versus on SPY where it just kind of picked a spot out of the air, and a lot of times that's what you see on SPY and QQQ, that if one or the other, let me say it a different way, one or the other usually leads, and you like to get confirmation from the second one that the move is real. So in this case, on this rejection, and when Q's failed, SPY followed. So I think in this case, Q's were leading to the downside, and pretty much everything else followed right along. Here again, we had the uptrend line on the hourly chart. We came up to this upper gap range, took a look, a couple little peaks inside, but then broke down. If you were on top of it, you had a large volume over price bar here to use as a reference. That came in right around 292. When that broke and the trend line broke, then you had a pretty good shot to the downside. Came down, filled this gap, and now we are down towards the bottom of this value range. You can see it right here. Support, resistance, a lot of traffic in here. So I think 282.50 this morning is going to be a good pivot point for you to use as a reference. If price comes down and tags that, comes back up and starts recapturing these levels to the upside, if Jerome Powell has good things to say and the GDP comes in okay, could see a move back up. But if it loses 282.50, then you've got to be looking towards this open gap down below, and then even potentially a retag of the prior lows at 270. I doubt you'd see that today, but hey, you never know. So I think 282 is your key spot below, and with that open gap in focus. IWM made a reach up to essentially close this upper gap. There may be a few cents there left to fill, but came back down, was not able to hold the 20 EMA on the way back down. That was a key spot, as was the bottom of the gap at 175, and now it's sitting on the 8-day. I think the level you need to watch on the downside is 170. Below that, you don't have much there holding it to stop it from retagging this low down towards 163. If we go to the hourly chart, you can see the action where it did reach up and essentially tag the top of that gap there, and then reverse, broke the bottom of the gap. If you didn't, just looking backwards, and I know it's always easy to look back on a chart, hindsight being 2020, but what I like to do is just break it down to give you some cues of how you could have approached it. Top of the gap is resistance. We had the large volume over price bar here, which at that point should have been support because we were above it. We lost that. Could have been a potential short entry point. We lost the bottom of the gap, which should have been support. And then we had a big air pocket here where it eventually fell down to this 172.50 area. Now, I think that yesterday's closing low is going to be your pivot point right here. And if we go lower, then we've got this open gap yet to fill. And then I think a really, really big area is going to be this 169, 170 area, which is the confluence between technical support. You can see support, bunch of resistance, support back here. So I think that that little zone between 169 and 170 is going to be important. You get a break below 169, probably gonna run lower. Meta had some interesting trading action yesterday. We had a move above the top of this gap, and it sat there for a long time, hours and hours and hours. And I was long, hoping for a run up and a gap fill here. But when things started falling apart, Meta actually held on a little longer than most. I think there were some responsive buyers at 168, but when that thing broke, it broke fast. I got on a short late, but that just goes to show you that it was clear as day that 168 had to hold, and then once it broke, that was a sign to get out of your longs for sure. And I think a couple guys in the trading room who weren't long were waiting for that thing to break, and they got on it a lot earlier than I did. But anyhow, it proceeded down. I think I got it here at the bottom of the gap because that should have been support there as well. Bottom of the gap should have held. When it didn't, it just kept going. So this morning, price finds itself really in the middle of no man's land. If you get a recovery of the top of the gap, I think that would be a bullish move. Otherwise, I think it probably comes down here and fills this gap, and then there'll be a moment where it'll have to decide, is it going to reverse or just come down here and double tag this low. And speaking of that, if you do get a tag of this low, look for bullish divergence on your indicators, because you can see here that we've got a low here at 156. You can mark the lows on your indicators, and then if price comes back down again, you may find that RSI and PPO are at higher levels, and that would give you a little confidence to try along at the prior low and see if that doesn't hold, if you've got some bullish divergence going on. Apple, bad day at the office, down 3%. Came up to fill this gap only for a brief second on the opening bar, and then it let go. Your warning signs on Apple: one, it broke out of the gap and then quickly failed. Bottom of the gap should have held as support. It didn't. Once that broke, it came right back down to the top of the next gap, which should have held. It didn't. And then right on down. So a lot of technical check marks for the bears yesterday on Apple. There were a lot of opportunities where price could have held the line at technical support, but it cut right through all of them, all of these prior gaps. So today, I think your most important level is 137. Why? Well, a lot of resistance, support. Really important line. High volume over price bar here. If the bulls are going to hold Apple up, I think they got to do it right here, because below 137, you got kind of a hole in the chart. I think you could come down to 134 pretty quickly. So depending on which way this breaks, I think you got, if you get a breakdown below 137, I think you can take that short and look for 134 on the way down with a stop just above 137. Tesla has found its way back to a critical spot. We got the move off of the divergent low here, made a nice move up, put in a little a little bull flag, got another impulsive move, had several looks into this big gap that failed. We had a trend line off of the lows. When that failed, it went pretty fast. And notice that it cut through all of these high volume over price bars in this value area. So we went from outside of value here. We broke back into the value range, went up to the top of value, was rejected, and now we're working our way back down to the bottom of value. 700 is kind of an important psychological level, but I think 690 is your real, I'm going to take a shot on the short side. Why? Because support. You still got a largish, I think this is the bottom of value here at 690. And then you've got a big void in the chart. So if you're interested in Tesla, I would have your alarm at 690 versus 700. And I would take it there short if you get a break, and then look for the top of the gap at 673. And if things get going to the downside, come down and fill that gap all the way down to 650. Microsoft, bad day at the office, 3%. Same kind of idea. Nice uptrend off of the lows. We had a gap up the other day. We made an initial move, came back down, had one last try up above 266, lost this trend line, lost the top of the gap, quick gap fill, held the bottom of the gap for a couple of hours, and then fell apart into the close. I think here, I think you can see price kind of in the middle of no man's land here. You've got a large volume over price bar here at 254, and if you'll recall, that was a number that we referenced several days ago as a potential breakout level. Had support back here, support back here, support, resistance, resistance. So as it comes into 254, I think that's a level where it's got to hold, and if it doesn't, then I think you've got a pretty objective short to go from 254 down to 249.50 at the top of this gap, and then you got a little $2 gap below, and then back down towards the lows. So I think this 254 is going to be an important place for Microsoft to hold for any chance of a bounce today. Amazon, really bad day, 5%. I was long this one, obviously got stopped out. Had a reach up candle early. They reversed that fast, lost the trend line, lost these particular support levels, and it was a fast trip down. Now we're sitting at the top of a gap at 107.90. I think that's your pivot for today, just the top of the gap. If that fails, then I would assume this gap would quickly fill, and then your target below that, if the bottom of the gap does not hold, is going to be right down here at 104.75, and then your massive line of support is 102.50. You had a bunch of touches here, bunch of touches. So if that's one where you definitely want to have a alarm. If you've decided that, I really don't want to, mess around with Amazon at these levels for whatever reason, set your alarm at 102.50, because if you use your imagination a little bit, we've got a left shoulder, a head, and now a right shoulder forming for a big head and shoulders top. And this thing runs from 102 to 128. So call that 26. If you subtract 26 from 102, you're down near 75 on a measured move on Amazon. So that is definitely one you would want to take short should this whole big head and shoulders top trigger. And then of course that would mean most likely that the whole market is in more of a liquidation mode. So even if you're not a big Amazon intraday trader, that is a location where you could get a really nice swing trade that you could stay in for weeks and weeks, I would imagine. Moving on to Google. Same type of price action. We were in a nice up channel. Came up to the top. Rejection back here. we tagged it and then liquidated very quickly back down to 22.40. I think that's your pivot for today. You've got a largish volume over price bar there. I think if you break below, you're looking at 2200, and then don't forget you've got an open gap down at 2172 that runs down to 2143, and then we've got a rising uptrend line off of the recent lows. So I'd be using this 2245 this morning and see what happens with GDP and Powell. Netflix made a run at closing this gap. Did not quite make it, but reversed anyways. Lost the midpoint of the channel. Now we're down here at the bottom of the channel, right at your large volume over price bar. So in my mind, this level has to hold. It has to hold the bottom of the channel. It has to hold this large volume over price bar, or it gets back on the wrong side of the chart, as it were, below the uptrend, below the volume profile, and then I would be looking for 178 and 172 on the downside should this thing roll over. And then you've got good reference points at 164 where you had a prior low here and a prior low here, and you can see this this bell-shaped distribution where it's important to stay, if you're a bull, to stay above that high point on that distribution. Otherwise, once you get on the low side, then it favors, rolling downhill towards these lower and lower levels. So pretty important spot on Netflix. Semis, not as strong a push as some of the other names. Came up here, broke above 217, kind of toggled in here after it filled this gap, but once it rolled over, it liquidated pretty fast. Now price sits on this open gap at 210. I think that's your pivot for today. If price breaks below 210, I think you get the gap fill down to 207.40 and then potentially lower. If we can make a move higher and it recaptures 212, I think you can buy that and then look for a move to recapture the bottom of this gap and then move back above 217, back up towards these highs. So I think sitting on the top of the gap right here at 210 makes that an easy call as a pivot. And notice again, you've got this value area defined right here between the bottom area of value lines up with 210 and the top area of value lines here with 217. So in essence, all we did was explore the high and the low range of value over the last couple of days. ARKF had its run, broke trend, came back down, filled this gap, and then lost this high volume bar and came down to this 1640 area. I think that's your pivot for today. Below, I think you're shooting for 16. If it can hold it, you're shooting for 16.9. And notice on this on the ARK chart, the volume over price profile bars, they either are big or almost non-existent. So you end up getting fast moves between these levels because it really doesn't trade a lot. What it does is make more or less step functions. You see one here, a lot of trading. Then it jumps up, a lot of trading, and then it comes down really quickly. So the moves are fast and furious, and you can use these high volume over price bars to kind of look where the targets are going to be. ARKK, you can see in this ETF, the clusters are more tightly, a lot more volume in ARKK than there is ARKF. But here we went up to the top of value. You can see that here when it lost this trend line, came back down, lost that. Now we're kind of in the middle of no man's land. I think you got to wait for 4150 on the downside if it moves down first, or if you're really sharp, I think you could buy 4250 on the way back up, and then you definitely have a long on a break above 4350 at the where this big volume over price bar hit is, and you can see all the trading, resistance, 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 resistance. Then you get a bunch of support. If you break back above 4350, I think you could see a move up to 4550 relatively quickly. Told you about this trade yesterday. This is ITB, the home builder ETF. I really like this technical setup. This is not, it ends up being a call on housing, but I ended up taking this trade simply based on the technicals. We had a downtrend line. We had a pretty significant breakdown here below 5450. So breakdown, revisit the scene of the crime, back test, and then rejection. And what makes it nice on this particular setup, we've got a dual layer of resistance at the top. You can see we've got the declining 20 in the blue, and then we've got these prior lows as resistance as well at 54. So I took that short against 5450 with a stop just above. If it breaks above 5450, that doesn't mean 54.51, but if it gets to 54.75, I'm taking it off. It shouldn't go up there if the trade is right. But this, regardless of whether it works or not, this is a beautiful setup, and one that you will see repeated over and over and over again in your charts, that you get a breakdown and then you get a back test of the breakdown. And you often see that on the other side as well. It's the breakout and then a back test of the breakout, and then it goes higher. So that's just the same kind of thing in reverse. Price usually likes to come back and revisit that scene of the crime. It's a good way to remember it. XRT is the equal weighted retail ETF. You can see we've had a multi-week consolidation here. Now we're kind of pressing lower. I took a shot out at the end of July. I got a 59 July 29th 59.55 put spread for $1. You can see on the profile you've got a ledge here at 60, and then a void in the charts that could bring it all the way down into the high 40s. I really didn't want to. I wanted it more or less a cheap shot, which, if you think about it, if the max value on a 59.55 spread is $4, right? So I paid $1 for that, and so I've got a 4-to-1 risk-reward type ratio, and so I wanted a cheap shot. That's a cheap shot. So if you're not in it, one of the things that you could do is simply alarm 60. If XRT breaks 60, you should get a move down towards 50. That would be an extension of that move. You can see the ledge there at 60. Whether it makes it all the way to 49 in a straight line, you don't know. But if you wanted to alarm 60 and be ready for a potential breakdown there, I think that would be a very objective trade to make when and if that retail sector breaks down. And part of the thinking there is with the average consumer being so stressed out with energy and food bills, apparel, and all that kind of stuff may be the odd man out. So you may see guide downs on a lot of retailer names. And also, this is a nice way to hold through earnings season because you don't have that single stock. If you were to go and try to short American Eagle or something, and they were the one retailer that did well, then you'd be hurt. But if you were trying to make some call across the whole sector and you get this breakdown to go with it, then you don't have that single stock risk. So if you were looking to hold a basket of retailers through earnings season, I think that's a real good way to play. And you don't have Amazon in there as a big overweight. All of them are equally weighted, so each one counts the same. Let's wrap it up there. Hope you were able to manage yesterday okay. Real curveball. Had to be quick on your toes. So hopefully we can get back on track here. Stay nimble. Keep your position sizes relatively small. And, we've got the GDP and JPAL before the bell. So anything can happen today and probably will by the time the final bell rings. So if you're new to the channel, thank you so much. Please hit the subscribe button, the alarm bell. If you like technical analysis and like objective trade locations where you can target your trades, jump over in the show notes. You'll find a link to the blog site where you can drop in your email address, and then morning, noon, or night you'll get any of my content, midday notes, weekend notes, whenever. And you'll also find a place where you can support the channel with the Buy Me Coffee app. And I want to send a sincere thanks to the several people that send me very nice supporting gifts. I appreciate that so much. So if you want to do that, if you get a good trade, if you get a good idea, if my comments help you become a better trader, anything you care to donate to the site would certainly be appreciated. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day and talk to you next time.